Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, Head of Research at Valkyrie, and let's take a look at the midweek market update. I'll start with the usual quick rates discussion. We had a 25 basis point hike last week, despite the Fed needing to add nearly $400 billion in liquidity back onto its balance sheet to shore up a regional banking crisis. Some of the macro talking heads are saying it's not enough as far as rates are concerned, and that they need to keep raising. Others saying that if they keep raising, we're going to continue to see cracks in the regional banking ecosystem, while others are saying, you know what, that's fine. The Fed will keep adding liquidity to the ecosystem. So the market is currently pricing in the Fed being completely done with hikes and holding here essentially until mid-year. Now, there's no meeting next month. There's no meeting in April. A lot could happen between now and May 3rd, but this is currently where we stand. I find it unlikely that the Fed will cut for the next year and a half beyond July, and that certainly seems super optimistic. To me, the trend is your friend until the end, and right now the trend is rates go up every meeting until the Fed says otherwise. And as they kind of say, in general, every meeting is a live meeting, meaning there's no necessary predetermined hiking schedule that they have in mind currently. Now, if we look at Truflation, which is a measure real time of inflation in the US, this is a year-over-year estimate, and you can go through and read their methodology. It is currently far below CPI, and one of the biggest reasons for this is the way BLS reports housing data. Even though the housing data the BLS reports might be super lagging, 6 to 9 months according to Truflation's estimates, we still are sort of stuck with what we've got as far as CPI. So Truflation may be extremely optimistic here on this sub 4 handle print. And, you can go through here and look at all these items. Pretty interesting to actually see it in real time. It makes me wonder why the Fed doesn't have something similar, or they might, and we just don't hear about it. But CPI calming down would hint at the Fed holding here or starting to cut rather than continuing to raise. We have PCE on Friday, which I believe is the Fed's preferred inflation metric. So we'll see where that stands. That was slightly hot on the last print, but again, there's no meeting in April. So we won't really know till much closer to the meeting where things stand. I think the market in general is just very undecided on where things are going to be on a meeting-to-meeting basis. As far as the regulatory front, we've got the SEC and the CFTC having a bit of a turf war here, targeting individuals, targeting exchanges, targeting stablecoins. SEC going after Justin Sun and a few others alleging various misdeeds. We've got Coinbase saying they've gotten a Wells notice from the SEC, which means the SEC has an intent to sue, even though Coinbase, in order to go public, clearly, got SEC approval for that. So the question, they have, I think rightfully so, is why was it okay then and not okay now? I think all anybody wants is a playbook or rules of the road that are clear and obvious, and we can all move forward. Because this regulatory situation has gotten rather dicey. CFTC going after Binance and the CEO, CZ, for willful evasion of compliance and a few other things they mentioned in the suit there. Now, for anyone who's been around in digital assets for a little while, knows that Binance hasn't always been on the up and up. So I think, some of this stuff makes sense, that regulators are catching up to certain activities of certain exchanges that have done interesting things in their past. So we'll see where this pans out, but it hasn't helped Binance's on-chain reserves because those continue to flee the exchange basically as they're being targeted with regulator lawsuits. And if we look at BTC and ETH on exchanges, ETH in the pink here has continued to just dwindle, despite price really doing nothing for the past 300 days. It's essentially ranged from 1,000 to 2,000. The biggest difference, obviously, is the staking component. As we get closer to the unlock on April 12th, I'll get to that in a second, of the staking component of Ethereum, I think more people, including myself, are getting okay with locking up coins if there's a terminal date. Previously there was a time when you're locking up your coins, you have no idea for how long. It could be years, it could be months. Now with that door opening in sight, I think a lot of people are more likely to start staking. And this is kind of like the regional banking and money market funds. If you've been following that, regional banking deposits continue to dwindle because of the availability of money market funds with extremely high rates thanks to the Fed raising rates as high as they have. So with a 4% yield on Ethereum, unless you're actively trading it, which you probably wouldn't want to be anyway because of the range in price, you're better off, if you're a long-term holder, arguably, you're better off getting yield and just sitting on that over a period of time. I don't believe those staked ETH calculations are baked into this calculation here. Bitcoin, on the other hand, flat, slightly up, but in general still down significantly from those highs as far as exchange balances are concerned. And along with this regional banking crisis, we have really a crypto business banking crisis, because it does appear that many businesses in crypto are not welcome currently in banking, in the banking ecosystem. Some banks have stepped up after Silvergate and Signature have gone by the wayside to take in crypto companies, crypto startups. So we're not completely debanked as an industry just yet, although losing our two biggest banks certainly hasn't helped on the banking side of things. And really on the other side of the world, on the offshore side of the world, where Tether, the cockroach that continues to exist, surviving every single blow historically, just printing money hand over fist here because they're getting a majority of the flows that have fallen out of Binance USD and USDC. And we can see that here in the orange. This is the Tether circulating supply nearing 80 billion once again, nearing all-time highs, and is very likely to exceed all-time highs very soon. You have a drop-off here in USDC in relation to their banking issues with SVB, and really continued banking issues after losing Signature and Silvergate. BUSD in the blue here can only ever go down, it can only ever be redeemed, and then DAI here, which is mainly made up of USDC. So really the only game left in town is Tether, and they've really gained a ton of market share simply by existing and not doing anything nefarious and treating their customers appropriately over the past few years here. And semi-related to the banking news, there was a lot of talk about MicroStrategy and what was going to happen with their Silvergate loan. It turns out they repaid the loan at a 22% discount and just bought more Bitcoin with it. So they turned out okay in the end with their ability to manage that situation. Turning to some analysis, some fun stuff first, going to look at Google Trends, which maybe not too many people use or have heard of, but this is a measure of search history over time as measured by Google. And there are tons of different types of ways you can measure this. I like the vanilla way, just looking at the search term itself. You can type in BTC, you can type in all sorts of stuff and play around with it. But you can see over time here, this has aligned with price quite well, has aligned with, mania periods quite well. And I like seeing Google search trends come back. I like seeing interest come back with price here. If we go even further back, you can see what this looked like in December 2017 relative to now, and what it looked like, before Bitcoin existed, which is zero, nothing, right? So kind of a neat little alternative data point. Ethereum as well, perking up a little bit here from the floor. And again, you can see this align with mania periods. In general, though, what you do want to see is rising Google Trends with price, along with every other on-chain metric. It generally tells you that there is continued interest, mainly on the retail sector, but this could be anything, right? It could be news, could be trading in general, could be anything. And you can also dig into this by region as well, which is kind of fun. Switching gears to on-chain activity, starting with transactions for Bitcoin. Since the ordinal invention and really the regional banking crisis, that combination has helped transactions really pick up from their dormancy. Also, what is baked in here is mining. Mining activity is also picking up significantly. So all those things in tandem have really helped on-chain activity perk up here. And again, you don't want to see price picking up with on-chain activity kind of falling off. In general, that's not a recipe for bullish continuation. At the end of the day, you want utility for anything, and you want that utility to match price expectations. Active addresses flat, slightly down on a weekly average, picking up slightly since the beginning of the year here. And if we look at market cap against the average price of all the coins that have moved on chain, I kind of think of this as unrealized versus realized price. In this case, if there's a bunch of unrealized gains in the ecosystem, Eventually we hit a tipping point where it makes more sense for most people to take profit. And the opposite is true at the bottom here. Historically, when everyone, is not in profit or there are no profits to be had, it makes less sense to move coins around. So we're starting to turn the corner here, come out of the doldrums of zero on the Z-score, 0 or less. So a good sign for the beginning of bullish continuation. Looking at hash rate now, hash rate has exploded on linear scale, and interesting that somebody pointed this out, but on linear scale, it has continued to explode, nearing 400 exahashes or greater now. On logarithmic, though, it looks quite normal and orderly, arguably. So I don't think there's too much to worry about here. Now, when we do see this explosion in hash rate, the question is, who is it? Who's adding all this computational power? And looking at the change over the past month, it's been spread out amongst most of the big mining pools. So it's not concentrated. It's not one entity trying to take over the network by the looks of it, which is a good thing. So in general, it looks like, as price goes up, more ASICs become profitable once again. There's more infrastructure being built out. Arguably, there's more and more ASICs just in existence and circulation over time than there ever have been. Yes, some of those ASICs die over time. They get taken out of circulation, but that's a slow process. ASICs can just sit dormant waiting for profitability, whether that's electricity costs or price or a combination of the two, and then get turned on. And you have situations like this where hash rate just continues to increase. And looking at, similar to the MVRV metric, the Puel multiple, this sort of, to me, says, are miners fat and happy up here with a ton of relative profits, kind of a year-over-year estimate, versus our miners under stress-like conditions. And you can see during bull market periods, bull market highs especially, miners are quite fat and happy relative to where they were, over the prior year. Looking at the recent periods, miners were definitely under stress conditions. And as price recovers a bit here, miners get out of those stress conditions, and miners on a year-over-year basis become more profitable. So again, this is just another oscillator that sort of helps guide where price may be headed down the line here. Switching gears to technicals for BTC, bit of a messy chart here, but again, the biggest thing with trend technicals specifically, are we above things we need to be above to be bullish? And we are. We're above the daily cloud here. We're above the 200-week moving average. We're above the 200-day moving average. We're above the range from July 2022 at 25K there. That's currently the key level on the downside. Some would argue a support level, as well as the 200-week is down there at 25K. So the big zoomed out picture for me is we are definitely in a bull market situation here. On top of that, we've got this inverted head and shoulders chart pattern that we're working on reaching that final destination or target measured zone between 31 and 34. So all the overarching, trading decisions are sort of based off of that. Now you can look at other things, similar trend metrics, but most likely they will tell you the same thing in that things are very different than they were a year ago, even different than they were 3 or 4 months ago as far as price expectations. Zooming in a little bit, looking at just what's happened since February, we were holding this pattern known as a megaphone, and you can kind of see that there. In general, with any chart pattern, you take the range, and if it has a bullish bias, you take the higher expectation. If it has a bearish bias, you take a lower expectation. To me, the megaphone historically probably carries a neutral bias. So until this thing actually breaks out, which it looks like it has to the upside, you can say, okay, well, let's give it this bullish bias and see what happens. But this in tandem with that bullish trend expectation and chart pattern on the high time frame has a reasonable chance of reaching those targets. This isn't anything crazy. If we go in on lower time frames, really the lowest time frame I'm comfortable sort of looking at, the hourly, we were working on this other chart pattern called a diamond top. In general, this is a reversal pattern, so this has a bearish bias in this case. And really with most chart patterns, what you want to see is this dwindling volume as we get to this expectation of completion here. We had the move to the downside. This was related to the Binance news. Sometimes it lines up like this, sometimes it doesn't, but it helped that the market structure was already ready for a move to the downside. So we got the move to the downside. We've got a little bit of a falling wedge or breaking above here now. But, zooming out, this is all just noise at the end of the day, unless you're trading this on super low timeframes. Flipping gears to ETH now, like I said, that staking unlock is coming April 12th, where they'll be upgrading with 2 different protocol upgrades, Shanghai and Capella here, and that will allow for the withdrawal of staked ETH. Now, I've seen a lot of estimates as far as what this looks like when it actually happens. It's kind of like that banking stress test. If there's a bank run, what happens to reserves? In this case, you can't actually run the staked ETH, because there is a queue that forms once you want to withdraw, and depending on how much you want to withdraw, it takes more and more time. So we may see a continued period of 30, 60, even 90 days of withdrawals happening in this environment. So we'll know more when it happens. I haven't really been satisfied with any estimates that I've seen. We just kind of need to see it play out in real time. And we can look at the ETH deposits to sort of get a clue. Now there's around 17, 18 million here deposited in the staking contract. We know for a fact that the Kraken ETH specifically, because of the SEC lawsuit a few weeks ago now, has to get unlocked. Whether or not Kraken is going to give customers ETH upfront immediately, or whether they're going to do it over time, I don't know the exact specifics there. I don't know if they've even said what necessarily has to be done. I mean, that's an interesting conversation with the SEC when they're telling you you have to shut down your staking, but you can't give the coins back because they're locked in the protocol. So I don't know what exactly they worked out with the SEC as far as what's going to happen there. But at the end of the day, all of this ETH will have to leave. Now, the remaining ETH here may be okay. Coinbase is being targeted with that Wells notice, as they said, and I think it's unlikely that this has to get unlocked. And by okay, I just mean not all immediately going to get withdrawn. So it's definitely something we'll be watching, I'll be talking about as it's happening, because that will more than likely than not affect price at the end of the day. Looking quickly at some on-chain activity for ETH. Transactions per day largely flat. Active addresses slightly down, mostly flat. Not too much happening on-chain with ETH. I think as DeFi slows down, NFTs slow down, and staking picks up, you have less of a reason to use ETH on-chain. Additionally, you also have layer 2 networks, which are picking up steam because it's just cheaper to send transactions. And as far as the ETH goes, there really isn't much going on here. ETH is above the 200-day moving average, which isn't shown here. This is the 200 period moving average for the 4-hour, but it is above the 200-day moving average. It's still within the range that it's been in for about 300 days now. So for me, that's the most important thing. Until it gets above or below the range, it's very likely to just continue ranging. It looks like it's trying to reach the range high here, but really I can't get too excited about this until we're back above 1910 or something like that. Now, if you do have a bullish bias on this range, like any chart pattern, you can just measure it out, see where it lands. 24 to 27 is a reasonable price target here. April 12th is when that unlock is available. And again, not all of that ETH will be unlocked immediately. It'll take 3 months, maybe more, to unlock that ETH over time. So it'll be very slow. And we'll just have to see what happens when it happens. But I still do like the odds for bullish reversal here after 300 days of sideways on ETH. ETH against BTC on the cross pair here has fallen out of a multi-year trend channel known as a pitchfork. It has fallen in the weekly cloud, which is typically a reversal sign. And at this point, it's flipped from bullish to neutral. It's picked up a little bit of steam over the past week, but trading this in a vacuum, the expectation would be a move to this 055 area. So ETH against BTC doesn't look too bullish. And then lastly, a few legacy charts here. DXY has continued to pull back over the past 3 weeks, which is great news for anything priced against USD. You could maybe even argue an inverted cup and handle here, which it would be bearish continuation. Ultimately, digital assets have done best when the Dixie has been bearish or in a bearish trend. So this will help us as far as a tailwind is concerned. Gold quietly back to all-time high levels. I don't see too many people talking about this. I don't know how many gold bugs necessarily there are on Twitter anyway, but gold pushing highs, again, just measuring this range, you get a decent expectation for 23 to 2400. It's even got a multi-year cup and handle type pattern that should also move towards bullish continuation. Then lastly, just looking at the S&P again, it's been really range-bound chop for the past month and a half since hitting that high here. Arguably the inverted head and shoulders dream, not quite dead yet, still above the 200-day moving average, still above that diagonal resistance, but it's definitely just a giant mess, and I think this just speaks to the general uncertainty of everything going on with rates, banking, bond volatility, all that fun stuff. That's all for this one. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.